Hi, my name is Ben Shepard and I'm co-editor of Global ETF Profits. The summer months are always volatile as the kids are getting out of school, folks are going on vacation. Volume really just seems to drain away from the markets, and this summer was no exception. In late May, the S&P 500 was right around 1,200 points. By early July, that had dropped down to a low of 1022. And now we're back up into about the 1100 range, and we've seemed to have been stuck there for the past week or so. But market internals are showing more volume coming in, more traders in the markets, and that's going to have the laudatory effect of helping to calm down some of the volatility. Since we launched Global ETF Profits back in March, our portfolio is up 3.7% since March 17th. Over that same time frame, the S&P 500's dropped by a little more than 3%, and the broader MSCI EAFE index, which tracks global markets, has given up 2.9%. And that's a more appropriate benchmark for our portfolio since we definitely have a global bent given our name. The reason we've managed to outperform those broad benchmark indexes, though, is diversification. Our growth portfolio, which, including holdings like global healthcare, our BRIC index, and some of the others have given up some ground as market confidence has kind of waxed and waned. But our income and hedges portfolio has just performed exceptionally well. Overall, it's returned better than 7%. And our short-term opportunities has just been absolutely phenomenal when we got into the South Korea index, right just when pessimism had completely overtaken the markets, given what looked to be a pending confrontation with North Korea. And since we purchased the South Korea ETF, it's returned better than 21%. So that really underscores the point that investors need to maintain diversification across all asset classes and all different types of opportunities. Because frankly, if it weren't for our income and hedges portfolio, if you back out the contribution that made as well as our short-term opportunities, we'd actually be about in line with the S&P 500. The positions in our portfolio are listed from our top hot money buys now and on down in order of preference. So when you first come in to our service, your best bet's going to be to buy the top 3 picks in the growth portfolio, the top 3 picks in our income and hedges portfolio, and with the short-term opportunities, it's kind of up to you whether you want to invest in those right off the bat or not, because those are definitely our highest beta, highest risk plays. But as you can see from our performance, if you take that approach, you're going to generate market-beating results. A lot of people thought diversification was dead in the wake of 2008, but our portfolio performance is just more proof that the benefits of diversification are alive and well. Again, my name is Ben Shepard. I'm co-editor of Global ETF Profits.